Hi everyone, today we are going to talk about the balance sheet analysis of SJVN Limited. The presentation will cover the following topics. So let's begin with the working capital, which is the net difference between current assets and current liabilities. The working capital has decreased gradually from the past 5 years, which indicates that the company is increasing its short-term borrowings and other current liabilities to meet short-term needs and not adequate growth in the revenue. The current ratio is also showing a dip and has crossed the ideal limit of 2:1, and it has fallen to a level of 1.13 in the financial year 2023, which indicates that company's liabilities and borrowings are increasing to acquire furthermore projects that will help them to increase their capacity and revenue too. Company is slowly increasing the level of borrowings to expand its further operation so that they can compete with their peers and maintain healthy operations. The company is also laying emphasis on growth and increasing budget so that they can achieve the lower rate of interest on debt. Retained earnings, on the other hand, are decreasing every year from 3,55,000 lakhs in financial year 2019 to the mark of 54,000 lakhs in the financial year 2023. Company is also paying regular dividend so that interest of shareholders can be protected to a maximum level. Also, company has buyback its shares, and there was a sudden increase in the acquisition of new projects to compete with the peers. 2. Return on capital employed is decreasing from 13.47 in 2019 to 7.76 in 2023, and that indicates the company is not using its capital efficiently and is generating a higher return on investment. The company is borrowing a lot from the sources for future needs, and which is increasing its financial risk and cost of capital. Company should ensure all the tiers of management that the fund is being utilized to the optimum level of utilization so that the company can achieve long-term as well as short-term objectives. Company should focus on maintaining healthy cash flow to meet its interest and finance cost as well. Efficiency in capital allocation. Company recently invested in 2000 megawatt solar project at Khavda Solar Park and also commenced construction of 1000 megawatt solar project in CPSU tender by IREDA, backed through competitive bidding, Bikaner, Rajasthan. 75 megawatt Parson solar project also commissioned by SJVN in UP. Company is also focusing on non-renewable renewable sources of energy to meet its future requirements. Return on assets is the ratio ideally to check a company's ability to generate profits relative to its assets. ROA is continuously falling because of decrease in the profitability. Increase in total assets and sudden increase in debt levels, also an increase in the market competition and showing a downtrend on economic non-renewable sources of energy in order to protect the environment are the reasons of downfall of asset turnover ratio. SJVN Limited has announced the buyback of shares not exceeding fully paid up equity shares. The face value of share is Rs 10 each at a price of 38.75 for an aggregate amount. The shares consist of 5% of the totally paid up equity share capital of the company. SJVN invites these shares back by buyback in 2018 Feb. Reserves and surplus of the company are increasing slowly to meet future expenses. Also, the company is paying out dividends to shareholders to ensure their interest in the protection of further clearance. Now coming to the most important part, liquidity and solvency analysis. And for that, we have the current ratio and quick ratio. And by analyzing the trend line, both are going hand in hand in both the directions, which indicates the company is not holding much of inventory. As the company is in the field of power generation and distribution, company should focus on increasing current assets and reducing current liabilities in order to maintain healthy liquidity ratios. And also, there is a conjunction between cash flow statement and balance sheet as well, like financing and investing activities, changes in working capital, debt levels, and cash equivalent, and many more. Contingent liabilities. They are the liabilities that may occur depending on the outcome of uncertain future event. Company is increasing its liabilities because of the regulatory policy frameworks adopted by the government in order to protect environment and follow norms under the Paris Agreement and various other environment protection organizations. The company is investing around 2.25 crore in the field of research and development so that they can develop indigenous technology to utilize more utilization of their plants and thus leading to more generation and revenue. We can notice a healthy base trend line of the promoter shareholding from the year 2019 to 2023 that shows that promoters are believing in the company a lot. Return on equity is also showing a dip, and a sudden increase shows that the returns of equity is increasing in order because the profits of the company is also increasing rapidly. Risk assessment and management. The company is maintaining 4.2 crore provision for doubtful debts in 2022 and 2023 each. The main challenge of the company is the initial high tariff of hydro projects for the initial years, as it is difficult to compete with renewable sources and thermal power plants. Also, there is high intervention of government bodies and environmentalists at the time of acquisition of lands and initiating the project. Also, incurring a huge expenditure cost on pre-construction activities and business development may incur in huge cost. The sudden regulatory changes impact negatively on the balance sheet because it will decrease the generation capacity and sometimes shut down the project. Insurance policy. Company is heavily invested in the field of insurance of the company employees too. The price to book value of the company is 0.8, which is way lower than the average of power sector and distribution, that is 2.49. Government of India has identified SJVN for development of 10 number of PSP projects aggregating 12,790 megawatt in the state of Maharashtra, Himachal Pradesh and Mizoram. The price to book value is showing positive movement and indicates a positive trend because the company is planning to acquire and merger with few companies in the future. EPS is a financial metric that represents the portion of a company's profit allocated to each outstanding share of common stock. Thank you so much for listening me patiently.